Guinness Asset Management was set up in 2003 by Tim Guinness. It's an independent, what we might call boutique investment company. Tim has a particular expertise in energy, and is probably one of the leading experts on global energy in London. And he's set up a business which now has about 25 people working in it. We're very much investment led. We have various global funds in global equity, global equity income, and the EIS team was set up a few years ago by Shane Galway and has been sponsored and backed by Tim, starting in renewable energy, but it's now branched into AIM. We are trying to provide our investors with a spread of investments in AIM stocks which qualify for EIS relief, and I think we're one of few houses who will provide a EIS investor with a range of investments in new companies on the AIM exchange. Well, one of the things that happens about AIM investing is AIM EIS investing is that you don't know what you're going to be investing in. We cannot be sector specific because we can only invest in those companies that are raising new money, and typically we've been investing in investments which are in established businesses, and what we're really looking for is management teams that we find have a credible plan and a cogent way of achieving that. So that is really the key to the investment. There are sectors which we can't invest in on AIM, which are mining stocks and resource stocks and property-backed investments. So that sort of eliminates some part of it. And there are lots of businesses which tend to take advantage of the AIM stock market, which are involved in earlier stage, perhaps technology businesses, which provide a large proportion of the stocks that we look at. We try to invest in companies which are not as early stage. There are early stage companies, but any company which is coming to the AIM stock market, to the public listing markets, will be developed it will have had to have reached a certain stage of development, which will have encouraged institutional investors. So they're not brand new startups, they're businesses which have got that credibility and we feel will be able to command the attention of the investing community. And those are the ones we're looking for. We would expect to invest in between 10 and 20 investments. That would give us what we would hope would be a comfortable spread. The two year funds that we've fully invested now have had about 16 or 17 investments in them, so 16 or 17 different companies. The number of stocks depends on how the market's, how receptive the market is in any year. Last year, I think we looked at about 70 companies, and we invested in 18 of them. The danger is looking at AIM as a whole market. It is definitely a stock pickers market. I think if you look at any of the commentary on AIM, it tends to be very damning about the numbers. But there are over 1,000 companies listed on AIM. Some have come off, some have gone on. The market capitalization of AIM is about 75 billion, I think, at last December. So there's plenty to invest in. There have been some huge success stories as well as some abject failures. For instance, I think if you invested in £1,000 in Domino's Pizza, which actually has moved to the full listing, you probably have business which £1,000 would be worth about £11,000 now. So that's a huge success. And there are others like ASOS, which is a big company. So companies move through AIM. I don't think that you should be looking at AIM as a stock if you're looking at the AIM EIS scheme, because again, we are looking at investing in companies which are at the smaller end of that marketplace, and some of them will grow, and some of them will perhaps not grow as fast. Hopefully, not too many of them. Yes, I mean a good example of a very successful business which we've invested in would be Bilby, which is a business which is involved in the installation and maintenance of gas appliances and heating appliances, mainly in South London. They came to the market, I suppose, 2 years ago at about just under 60p, and they have fulfilled their business plan as far as the market is concerned, and they're now trading at around 130p, I think. So that's a company which is well established, good team, good plan, and has fulfilled its expectations. Another company which we've been very pleased with is Fishing Republic. That's a business, probably the largest retailer of fishing tackle business in this country. Another very strong team, know their business very well. It's a very fragmented market. They came to the AIM market with a view of getting more, better capitalization so that they could build out their own premises, but also to take advantage of acquisitions and build a stronger position in the fragmented market. I think two very good companies. One or two, of course, 3 years we have to hold these stocks in order to qualify it. So some of the failures now may not be failures at the end of the year, and it's a dangerous talk. But one company I can certainly talk about, APC Technology we invested in, which is a business which had a very good electrical wholesaling business, which wished to diversify away from by investing in energy and efficiency businesses. They acquired a business called Minimize. And that's had some difficulties. The acquisition didn't go as well as it should have, and that's one of the risks in any business plan. Sometimes it doesn't go as well as you hope. But they've, since then, I'd like to say, they have actually had another capital raise, but we've lost half our money in that. I think the management team had, well, they definitely did have weaknesses, and we hadn't spotted that. We might never have spotted that, but it was a cogent plan, and I believe they've taken steps to rectify it, so that it may still work. But we probably wouldn't have wanted to get in when we did. The first thing is that we're looking to provide a spread of risk. We are looking to preserve as well as grow your investment, and I think that the important thing about our team is that we have got some experience, which you can see from my grey hair, but also one of the things that's important about this is the individual investor will not get exposed to every AIM listing. We built up a presence and a reputation in the marketplace with the corporate brokers who are bringing these stocks to the market, and hopefully we can see our way through to pick the winners rather than the losers.